Global markets are paying attention to the political developments in France, and US stocks have slipped from their latest record-setting run as Wall Street weighed worries over the government shutdown against the positive macroeconomic narrative and bright hopes for artificial intelligence related stocks. Gold is more golden than ever, and markets are applauding the first female Japanese Prime Minister. Gold futures were over $4,000 per ounce for the first time ever as investors continue to flock to the safe haven asset. The Dow Jones Industrial Average closed down 0.2%. French CAC 40 attempted a rebound, closed up 0.04%, while tech-heavy Nasdaq also closed down minus 0.67% after fresh record high closes on Wall Street. Our deep dive looks at the recent turmoil in global politics and how this is affecting global business issues. Hello, welcome back to Global Business Insight, where we delve into the headlines and probe a little deeper with thoughts and perspectives to help business persons navigate the context. The public mood in France has soured as President Emmanuel Macron faced growing pressure to either resign or hold a snap parliamentary election to end chaos that has forced the resignation of 5 prime ministers in less than 2 years. Macron has repeatedly said he will see out his second term, which ends in 2027, despite now facing what may be the worst political crisis since the 1958 creation of the Fifth Republic, France's current system of government. France offers neither clarity nor certainty as Prime Minister Sébastien Lecornu suddenly resigns less than a month into the role, leaving the government without a working majority at a time of rising fiscal pressure. The vacuum in resolving the deadlock plus mounting calls for fresh elections on President Macron magnifies uncertainty and could dramatically impact French compliance with European Union fiscal rules. Reflecting the heightened risk, we are seeing the largest rise in country risk among major markets. Yields on 10-year French government bonds traded at levels not seen since the collapse of the Barnier government in late 2024, at par with levels seen in July 2012 during the Eurozone debt crisis. Analysts have to decide if they have priced in enough of the unfolding political and economic risks as deficits look sure to rise and difficulty in pushing any tough fiscal pills at a time when GDP growth may slow by around 0.2 percentage points will definitely also complicate matters. The likelihood is that without an approved 2026 budget and lack of progress on fiscal consolidation, the government would operate under an automatic extension of the 2025 budget, limiting both new spending and reform initiatives. Analysts are of the view that President Emmanuel Macron could either appoint a new prime minister in a fresh bid to stabilize his government or dissolve the National Assembly and call snap elections, which could play into the hands of Marine Le Pen's so-called far-right party seen to be doing well in the polls. There is no guarantee that a new prime minister, after so many will do much better, and elections could easily deepen and further complicate the political fragmentation and delay key fiscal decisions. Also, the euro has already been showing signs of weakness in response to France's political turmoil. This fresh twist could further dampen investor appetite for the currency and disincentivize new investment in France. Markets are watching the deterioration in sentiment as the CAC 40 attempted a rebound after yesterday's dip. For now, the situation remains contained, but it's a space nervously watched with a high probability of deepening of the political crisis. Sanae Takaichi's surprise victory in Japan raised hopes that the protege of the late Shinzo Abe could usher in similar stimulus policies that may boost stocks but leave the yen fragile. Takaichi has called for tax cuts to cushion the rising cost of living and criticized the Bank of Japan's decision to raise interest rates. The initial reaction from investors to Takaichi's victory was to send Japanese shares to record highs and sell long-end government bonds and take the yen down. Analysts, of course, know that the context today is very different from when Abe took over, noting that Japan faces inflation right now compared to deflation over a decade ago, and the impact of US tariffs is another significant factor. What Japan offers, however, is much more clarity and certainty despite the political change. Still, the wider markets are rallying despite the US government shutdown, another political situation, leaving the Federal Reserve with data release delays. But traders are unmoved that the Fed will cut rates by another 25 basis points this month, further benefiting risk assets. However, we saw as at yesterday, when markets closed lower, that mood may be changing. How are businesses exposed to these global developments? The obvious move to safe haven assets and even crypto that has seen recent regulatory and institutional investor support provides some insurance from losses, while others are still betting that the momentum in the high-tech AI sector, earnings optimism, the expected Fed rate cuts, easing effects from tax reforms in the US, and somewhat strong macroeconomic data from the US are also all providing some comfort, offsetting some of the headwinds and uncertainty. In periods of uncertainty and lack of clarity, businesses tend to freeze both hiring and layoffs, and we have seen a bit of that in the US. There could also be delays in executing major already announced plans. And if you look at the risk, the extra country risk, that could be a deciding factor for many in deciding to invest in safer countries or safer risk jurisdictions. So far, in summary, Japan is looking good from a risk perspective. The US not as good, and France may be looking ugly. To other business stories, the European Union is threatening Britain's steel industry with tariffs of up to 50% in a dispute that could complicate Sir Keir Starmer's attempts to reset relations with Brussels. Yesterday, Brussels announced taxes on steel imports coming into the bloc amid fears that a flood of cheap steel from China and other Asian countries could hurt the domestic industries. But British steel producers will also be very much hit by this crackdown, given that almost 80% of Britain's steel exports currently go to the EU. Sir Keir Starmer said the UK was in discussions with the EU about the tariffs as officials move to negotiate an exception for Britain. But the UK Treasury has problems of its own as it puts together a November budget which it hopes can balance the books, reduce UK borrowing costs, tone down rising prices, revive the sagging economy, and inject fresh hope for business and consumers alike. Seen as a tall order, as most economists warn that Chancellor Reeves may have to raise taxes by at least £30 billion to balance the books and also to restore £9.9 billion of headroom against our fiscal goals. All this while convincing voters and investors that she has a clear, coherent and credible plan for its fiscal and economic policies. All this could be quite challenging. Qualcomm yesterday said it is acquiring Arduino, Italian electronics maker, whose inexpensive programmable circuit boards and computers are common in hardware startups and robotics labs for prototyping. The Italy-based company would become an independent subsidiary as Qualcomm moves more confidently into robotics. The deal gives Qualcomm direct access to the tinkerers, hobbyists, and companies at the lower levels of the robotics industry. Arduino products so far can't be used for building commercial products, but they're more popular for testing out a new idea or proving a concept. Tesla shares spiked up more than 5% after it posted two videos on X teasing a big announcement as it unveiled a more affordable version of its best-selling Model Y SUV as the electric vehicle maker seeks to reverse falling sales and waning market share amid the rising global competition. Tesla also announced a new version of its full self-driving supervised technology yesterday. The new SUV is an affordable vehicle still based on current manufacturing and design platforms. Computers maker Dell yesterday nearly doubled its annual profit growth target for the next 4 years, betting on robust demand for its servers that power artificial intelligence workloads. Dell customers include Elon Musk's AI startup XAI and CoreWeave, and Dell lifted its expectations for annual growth in adjusted earnings per share to at least 15% from around 8%. Dell also sees compounded annual revenue growth between 7% and 9% for the next 4 years, up from its prior view of 3 to 4%. The U.S. Energy Information Administration said yesterday that U.S. oil production is expected to hit a larger record this year than previously thought, also warning that a glut of oil will weigh on prices in the months ahead. The Department of Energy now expects U.S. oil production to average 13.53 million barrels a day this year, up from the prior forecast of 13.44 million barrels per day. Kenya's central bank cut its benchmark lending rate for the 8th meeting in a row yesterday, saying there was still room to ease monetary policy further as inflation remains well within its target range. The decision takes the Central Bank of Kenya's policy rate to 9.25% from 9.5% previously. Also in Kenya, Finance Minister John Mbadi says the country has completed converting 3 railway construction dollar-denominated loans from China into yuan in order to save on interest payments. The swap, according to the minister, will save Kenya about $215 million a year. And in Nigeria, President Tinubu has asked Parliament to approve $2.3 billion in new loans and authorize the issuance of a $500 million debut sovereign sukuk on international debt markets. Finance Minister and Coordinating Minister for the Economy, Wale Edun, told the Nigerian Economic Summit Group landmark event, which kicked off this week, that government was focusing on green bonds, sukuk, and diaspora bonds, which are cheaper than Eurobonds. And Zambia's President Hakainde Hichilema has branded cuts to international aid long overdue, adding that the closure of the U.S. Agency for International Development and reductions by other donors offered his country the opportunity to take care of its own affairs. Egypt's annual urban consumer price inflation eased slightly to 11.7% in September from 12% in August, but higher than forecast of 11%. The Egyptian Central Bank also said the current account deficit narrowed to $2.2 billion in the April to June 2025 quarter from $3.7 billion in the same period a year earlier. Asian stocks tracked Wall Street lower as investors react to fallout from the political drama in France and a new prime minister in Japan, also as the lingering US government shutdown lifts gold to a record $4,000 per ounce level. Oil prices inch up as investors brush off fears of a glut after digesting the latest OPEC Plus decision to restrain production increases next month. Brent crude in early morning trading was still under $66 a barrel, up 0.81%. Well, that's all we can take on this episode of Global Business Insights. This is Sanae. Thanks for watching. Bye-bye.